Hello and welcome guys back to another YouTube video here on the Prosperity Academy YouTube channel, the #1 largest growing YouTube channel on the entire internet when it comes to trading smart money concepts. Guys, have you tirelessly been going backwards and forwards, trying to formulate a strategy that actually works? Well, if this sounds like you are at the perfect place right now. Because in today's video, we're going to be giving you an entire strategy breakdown of a certain variable scenario of one of our strategies. So in this video, we're going to be covering the daily 4-hour and 15-minute, and you're going to see, yes, our live trade that is still open and running on GU and the explanation of how to trade it. So the first and foremost is order flow, right? We have to understand order flow. And so we have order flow, which is the external swing structure. The external swing structure, which means, of course, it's the outside, right? And then within this order flow, there's going to be trend, which is going to be our internal, right? So order flow is what you need to understand to know essentially what the intention of the overall price the banks want to take any price action to. Where are they intending to take this price to? As you can see in this right here, we are bearish order flow. So we're expecting the order flow leg to come back up here and then down here. And then of course we are expecting the trend to shift back to bullish. And then eventually when we get up here, we're going to shift back to bearish. And that's an amazing opportunity to get into a trade up here. So that's the first one. The first one is, of course, structure and order flow, and then the second one is just supply and demand. So knowing that, where are the supply levels that cause the first change of character in here, that cause from this supply level that caused the break of structure. So let's actually apply this knowledge now over on the actual charts. So guys, welcome to the charts. Now, let's start on the daily time frame. For this, very clear to kind of see, GU is very bearish. The order flow is very bearish. So if we just mark out the internal on the daily, which will be the external on the 4-hour, it's kind of the rule of thumb. So we'll map out this so we know we're order flow bearish. Now we'll mark out a level of supply level 1, right? Did price pull back 50% of the leg? Okay, yes, it did from this high that put in the low, break of structure. So we are order flow bearish. We are bearish, right? We're expecting a lower low. And then we have a break of structure again. Now we come back up. So what are we expecting, guys? We are expecting a lower low. Okay, that's great. How do you get involved if you know that information? So step number 1, understand what's going on the daily time frame in terms of structure. Mark up your supply and demand zones that are of relevance, essentially. So then step number 2 is come down to your 4-hour time frame, view it again. You can see that what I said is true. External swing low, external swing high. External swing low, it's a lower low. It's a lower high. We have a lower low and probably a lower high, right? So what essentially are we looking at when we get into this gray box, which is called our point of interest, which is a higher time frame area of supply or demand that cause something. There is a specific scenario, there is a specific profile that categorizes a supply and demand level, whether you know it's correct or incorrect. And that YouTube video can be found elsewhere and also in more of our premium content. So you can see now, if we look at the external, let's look at the internal. So we have low, lower low, higher high. So the internal shifts. So the external is bearish, but now the internal is bullish. So what does that mean? It simply means that the external is coming for a pullback to collect more orders and induce more levels of liquidity. So as that's the case, you can see now we have shifted bullish. Now putting in lower low, higher low, higher high, higher low, higher high, higher low, higher high. Okay, interesting. Because what happens when we actually get inside of our higher time frame point of interest is you'll see the shift This is called our realignment. It's where essentially the internal trend has now aligned with the external trend, which is essentially our confirmation to tell us that this low is going to be taken out. And so that is exactly what we expected. Followed by what? We have liquidity. We have liquidity. So there's a bunch of liquidity in this price leg. And then we have a supply zone, a supply level, which is responsible. It's the buy to sell that liquidated this high, which is responsible for breaking this level. So I would be looking at something like this. You could take an entry here for a swing position and target the low down here, which would give you what? Let's see. Entry on here, stops just above the highs. Let's say 1 to 11.59. So that's 11% risk and 1%. It's pretty good if you're managing $1 million account. And that's very doable. Now we have prop firms. Also, another thing that I'll be waiting for, essentially in here would be, again, a lower confirmation realignment. So we'll see that now as price comes up on the lower time frame, i.e. 15-minute, price will move like this. And then if we get a shift, then I'll get back in here on the 15 and target what? This low is TP1. This low is TP2. Okay, let's see how that actually plays out. Now we're going to drop down to our final time frame, which is the 15-minute. And we're just going to assess how price plays out. You can see all of the built-up liquidity resting in these levels. So again, I'm just going to play price out. See, we're building a lot of liquidity in here also, which essentially is just coined liquidity to take. This whole area right here is liquid. So that's an area to essentially target. I'm going to speed this up and go to the hourly, just until we essentially get up to our POI. Pretty quickly, right? So we tapped into the first one, which would be our swing position. Now just dropping back on the 15. What can we see? We can see this aggressive move to the upside. We can see this initial tap in. I want to remove this for a second. Initial tap into the zone, push away, and then break of the high. So the low that causes the new high is what? Here. So when this low goes, that's our confirmation. Essentially, price was, bullish, and then it will shift if the low goes. So it's now essentially inside of this zone. What you're waiting for is that low to go. Okay, so low is gone. So that is our change of character, right? That confirms that the zone that we take trade out of is valid because there is more supply than there is demand, which is all a change of character is. So there is our change of character. So that leaves you with the question, okay, well, where do you take a trade from? Well, is it any of these in here? Foremost, and okay, where's the low? So when does price start going up? Price starts going up there. Okay, so there's our low to the high. So our point of interest needs to be above this high. So then where else could it be other than the buy to sell, right? So this is mitigated. Yeah, sure, this part of the wick is unmitigated. But the final buy to sell before the momentum comes in, we range and then buy to sell. So for me, that considers our supply zone, that buy to sell range right there. And so that would be our 15-minute entry, more of the kind of, day or intraday type of position. And you just stop just above. Now, where would you have your first take profit? Let's just zoom out for a second here. Let's drop to the 30-minute. Our first take profit is going to be here, right? Why? Because if you actually just, again, zoom out even further, you'll see what is called structure, right? You'll see that this is the high that put in a new lower low, lower high. All we're expecting, guys, is a lower low. And that's why structure is the most valuable thing, in my opinion, when it comes to being able to trade consistently. And structure in a fractal nature, so the multiple different time frames all pieced together to build, one story. So let's just see how essentially price plays out. Price taps into your zone, taps in again, and then takes out the lows. So once these lows get taken out, for me, stops at break even. So no risk on the table right now. Like, you can't actually lose. And of course, we also have what? We have the swing position that's in here. It's going to take out this low. And again, guys, for the 15-minute position, we're going to take partial profits off at 11, but we're also going to leave some partial profits on to run to 23, because if we think it's going there anyway, because that's what we're doing with our swing, if we think price is going to go there, then, well, why would you not? And then if you zoom out, now it looks very obvious what's going on, right? You can see that structures low, high, lower low, lower high, and lower low. And so, guys, that's essentially it for the strategy in relation to how to play out. And just to show you guys, we are still live. So this is a live position. This is not something that I've just randomly found to try and explain something, which a lot of these YouTube gurus are doing. Like, I'm actively in this position that's been forecasted on Instagram multiple different times. So guys, with that being said, I'm going to wrap up the video there and come to a conclusion. And I'll tell you guys that is one of our strategies. We have multiple different strategies across multiple different time frames. So if you are serious about